Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hello, everybody, and welcome to the Real Estate Pros Podcast. I'm Mike Stansbury. Scott Hoffman from Clearwater, Florida. How are you, sir?
I'm well. How are you?
Good, sir. We're going to get into your story and how you're helping people in just a moment. But first, we got to pay the bills around here. At Investor Fuel, we help real estate investors, service providers, and real estate entrepreneurs 2 to 5x their businesses to allow them to build the businesses they've always wanted and to allow them to live the lives they've always dreamed of. Scott, I want to ask you, in business and real estate, as an investor and an operator, tell me your origin story. How did you first get into operating businesses and owning real estate as an investment? Tell me about that.
Yeah, thanks for asking. I have kind of a goofy unicorn story. I spent 20 years as a senior sales guy. My last corporate job, I birthed and built out the outside sales force for web.com in Jacksonville, and left corporate America, switched over to the marketing side. And my clients were Neil Patel and Tony Robbins and some really big brands, and spent about 9 years there. So that ability to translate both sides of the marketing and sales equation, that comes in handy later in life. But I grew up with a dad who's a tax accountant, and so I was exposed to literally thousands of small and mid-sized businesses over the years. And you learn that what's common and what's not, and that helped along the way. I got my MBA really late in life, and then my segue into starting to buy companies was that I was wholesaling houses in the Midwest to hedge funds, and built out an army of either boots on the ground or virtual guys and girls who would chase down deals. And we had a very specific buy box, and we were good at it. And we were doing 50 houses plus a year. But I could see the interest rate change coming and what that was going to do to the industry. So it was going to take a pivot. I bought my first company, a little website and hosting business. I really just got a group of people I knew together and said, "Hey, how about if we all throw $5,000 or $10,000 in, and we'll use it as a down payment, and I'll go buy a company." And we did. We still own it and operate it and grow it, and it's doing well. But that also showed me that I needed more money to do bigger deals. And so that was really the genesis for Burgeon Fund, where I brought together a group of people I knew to birth a private equity fund that focuses on buying profitable companies.
Okay, and these private companies that you're building, actually, you know what? I'm going to save this question because you mentioned something about your dad being a tax accountant. You were exposed to small and medium businesses. So I'm always interested to hear, what you're, maybe as a young man, growing up in that household, what was the exposure like to his business, and did he, how did he teach you those things? Were you in there, helping him file and just curious? Tell me about that really quickly.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Yeah, I think it was almost a birthright. It's funny, I've talked to a lot of kids, my age-ish, that grew up with dads who were accountants or tax preparers or CPAs, and there should be a support group for us. We didn't see our parent from late December until late April. They just ceased to exist. The benefit was that there was an expectation that you were working in the practice. Most of that was ledgering. I learned bookkeeping upside down and backwards. And I mean, I remember he had one client that was an auto repair business, and he would drop off a paper bag, like a grocery bag, with all of his receipts in them. And then we would put plastic wrap over the conference room table and dump the receipts out. And then we'd put gloves on to separate them out and do the ledger because of all the grease and brake dust that was all over everything. What you really get is this great primer, and it became easier and easier with experience to identify the businesses that were doing well and were going to continue to do well, largely by how the virtue of how they ran the front of their business. Now, I'm a dinosaur, so front of the business was yellow pages, direct mail, TV and radio. There was no internet. But you could see the businesses that had really quantified their front end really well. And then obviously, if you're providing a decent service, then the back end kind of takes care of itself. That was the real value of the education.
Yeah, so it colors what you're doing now, because it's one of those things that you don't know you're learning all these things until you see it later on in life, where all that ledgering, all that glove work, actually
Right.
serves a unique purpose, because you're able to see things that other people can't, and leverage that ability. So, but today, tell us about today, how you're helping business owners, real estate investors in your fund. And give us I'll let you choose your own adventure. Give us a deal you've done recently, and kind of just give us the details on that. Maybe the most creative one, or again, like I said, you can choose your own adventure there.
Yeah, so I'm also, in addition to being the managing sponsor for Burgeon Fund, I'm also a coach for Fund Launch, Bridger Pennington's program. I'm specifically focused on the sales and marketing of funds, but it gives me a great opportunity to work with emerging fund managers. So, in my experience, the most successful fund managers go through a fairly simple progression. They do a deal or a few deals on their own, frequently using their own money or some form of that. And then they learn syndications, where they start to work OPM with other people's money, but on individual projects with very simple operating agreements. And then they move on to fund, which is, bigger investor pool, not deal focused. And it really gives me a great seat also on just, some of the innovation that's going on in the real estate investment space. I feel like the outsiders are the ones probably winning the most right now, or just the people that are actively buying. All the hedge funds are sitting on the sidelines. Or they're off doing build-to-rent development type deals. So that creates a lot of opportunity. But when I say innovative, I know one fund manager, and they're specifically focused on buying build-to-rent and build-to-hold, but in what I would call C cities, like smaller than Youngstown, Ohio, Altoona, Pennsylvania, Erie, Pennsylvania, places where the hedge funds won't tend to surf. But where the rent rolls are very stable and very proximate to the major cities around them. That's one example. A brilliant fund manager that I'm working with, who is converting all of this dead office space to condos. which is a very unique skill set. So those are examples that are at completely different ends of kind of the tech world when I use the word innovate, but they're both doing well.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
For me, when I buy companies, the first thing is all my real estate education came with me. So my fund buys companies. What I tell investors is I'm in the business of raising money for down payments. So we give the buyer, the seller of the business, a cash down payment up to 30%, and the rest, there's an expectation that the seller will finance that in some way. We can do that because there's so many businesses for sale and so few legitimate buyers out there buying real companies. The disconnect is like 11-1 right now, sellers to buyers. And so that means that not only do we have the opportunity with the business, but we also have the opportunity with the real estate that may or may not be associated with that business. Or like I bought a business for the fund about 4 months ago. It's in Pittsburgh, my hometown. And the business was renting, so we're going to ride out that lease, but we know we need a second location anyway. So now we're actively looking, but it's a seller finance conversation on the sales side. Make sure the agent and the broker are taken care of, get some legitimate scratch in that seller's pocket. And then, for us, all of a sudden those rent dollars convert and stay inside the fund, which is good for my investors. I would say probably less than 10% of the companies we look at have real estate that's owned. Some sellers want to hold on to it and do some kind of a lease back. If we're going to buy it, it's always going to be a separate transaction for lots of reasons, depreciation being one. But also we have a separate entity set up just to manage real estate within the fund. As a fund manager in my ongoing role, I have operators run the companies, but really my job is to figure out how to keep as many of the operating expense dollars inside the fund as I can. So we'll continue to acquire companies that will solve problems inside the fund. Right now, I'm in the process of buying 2 car businesses. The third biggest expense my insulation business has is vehicles. And so if I buy a car business, that gives me access to the auctions. And then instead of me renting crew cabs from Enterprise, I get to rent them from us. And that couple $1,000s a month for every truck stays inside the fund.
Yeah, I love that integration. I was talking to a gentleman who has a pallet business, and he's like, I need to buy a sawmill, increase my, and he did. He within 3 weeks, he met somebody that was been in business for 30 years and bought the business. So I love talking about this. You mentioned earlier about the real estate. Are you, when you see something comes across the desk and that has real estate, does that become a priority for you to really focus in and look at?
It really depends on the business. Our first priority when we look at a business, other than tenure and profitability, those are the first 2 legs. But we always apply what we call a third leg. So what we're first trying to figure out is what can that business be doing that it doesn't know it can be doing, or that the whole niche doesn't know it can be doing. Like I said, I'm a dinosaur. I remember when restaurants didn't have drive-through. Drive-through would be a third leg. But if I go back even further than that, when I was a kid, you pulled up to a gas station and an attendant ran out to your car and the gas pump was really, really slow because it didn't have the pumping ability that they have now. And the guy cleaned your windshield and he checked your oil, but you sat there for 20, 25 minutes. And at some point, somebody said, gosh, maybe we should offer milk and bread and eggs to these people while they're waiting for their car to get filled. And the convenience store industry was born. So those third legs are really important because those those are revenue streams that the company doesn't have today. So we're going to figure out a growth trajectory for the business, and then also figure out a third leg trajectory. And then right behind that is, if there is real estate, how do we make it a win for the fund, a win for my investors? Um, and but it's interesting because it really does become a secondary conversation. Because if I try to commingle the deal conversation about the business and the real estate, things just get really choppy, and it seems to work better when they're kind of segregated out a little bit. Um, at least that's been my experience the last couple of years.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
And you mentioned that the ratio 11-to-1 sellers and buyers, is that because the demographics, the generation that owns businesses is getting a little bit older, and maybe the kids don't want to take over the business? Or what are the reasons that you see such a disparity there in the ratio?
Yeah, I think there's a couple things that go on. That's definitely the big driver right now. Starting about 4 years ago, the largest number of boomers were turning 70. I'm not there yet, but I think that's kind of a bellwether event that, like, maybe your bucket list becomes a little bit more in focus. Maybe my wife's a little bit more in my ear about, travel promises I've made or whatever. I don't think that COVID created the decision where the kids don't want the business. I think it was created before that. But what I hear from the founders a lot is the kids want more of a lifestyle business. They, like the way I remember my dad being gone for 4 or 5 months a year, they remember all those missed practices and ballet recitals and whatever. And they're choosing to be more present, and they're going to do that in another way. I read an article, this isn't unique to business owners. The largest ranches in the United States have the same problem. I think the difference there is the kids headed for the hills as early as they could get off the ranch. Much harder work than most of the companies we buy. So I think that that's one driver. I think the other thing is that very rarely does somebody start a business because they're great at sales and marketing. They typically start them because they're good at something else, whatever, cutting hair or making pasta or whatever their skill set is. And if they could just do that full time, they'd be really happy. Obviously, businesses have a lot more moving parts than that, and those moving parts start to drag on people. A lot of the founders I meet are simply exhausted. And unfortunately, they didn't really have you really should have at least a 3-year exit plan on a business. It's very rare I see somebody that has one. It's mostly either the other big driver, other than what you mentioned with the boomers, is health issues, either their personal health issues, a proximate family member, their spouse, kids, some major event is forcing change upon them, even if they don't want it. Those are the founders typically that I would offer to have stay around in some capacity. I think the big loss when these businesses shut down, and even like some of the old dog real estate portfolio owners that I've met over the years, they have something that I call tribal knowledge, which is they just gather information in these mental sticky notes, and they've got this amazing database of information, and they can't just dump it in a 30-day, I bought your company now, scoot kind of transition. A lot of it is situationally dependent, where a situation will arise, and then they'll tell you 10 times they faced that in the past and all the creative ways that they tried to solve it. I think we need to try to retain that value as best we can when the seller's willing and able to continue to be available to us as buyers.
That is very interesting that you just dropped that, because I have run into that. As you grow into any business and you meet people that have been in business a while, you don't realize all the wisdom that they have until you ask them a question. Have you ever run into this before? And then boom, they said, yes, and this is I solved this problem 3 different ways to Sunday, and here was the best way I solved it. And you're like,
Yep.
wow. But it is exactly what you said. It is hard to get that information from them until you ask a specific question, and then they have the answer. They're their own. Yeah, we need some sort of a AI to drop in their brain and spill it out for us, but I don't know if that's there yet.
Yeah, and I think that there's a direct parallel to real estate investing as well, because what I saw when I was wholesaling and since then is when real estate investors start accumulating properties, if their play is portfolio, as they're accumulating properties, they're still working. And frequently it started because they are self-employed, the business is doing well, and their CPA said, "Well, Bob, you made a lot of money. You need to go buy a rental property." And so they did. And then they kept on buying. And while they're working, a lot of the income is being plowed into those properties being well kept. They're Johnny on the spot on maintenance. They're Johnny on schedule for capital improvements. Then they retire. And this becomes their primary income. And suddenly we start to see slippage. The rents aren't being increased because they're scared to death the tenant's going to leave, because now they are going to have to do a renovation. I see the exact same thing with the businesses where, the house is paid off, the kids are out of college, they feel like they've got enough of an egg. They start to coast. They have no idea how to market the business anymore. They're just kind of riding out what they already have. And so, when we're building a plan, part of that is, what rocket fuel is this business going to need to start developing trajectory, just as a real estate investor is going, okay, what do I need to do to this portfolio to get up to market rent?
Yes. Yeah, I've seen that situation play out. That you articulated it very, very well. Locally, a plumber that owned a plumbing business for the last 30 years, he was selling his business, and I was consulting with the business broker. But that was his attitude. His attitude was, I'm 75. I don't run the business anymore. The girls in the office do. I'm just trying to find an out here. And he just wasn't motivated really to make it work for somebody to buy it, which was very, very interesting. So that's an interesting articulation. So Scott, let me ask you this. If somebody is in those situations where you can help out, maybe needs some coaching, or maybe needs access to the funds, where can they find you on the internet? Where can they learn more about what you're doing online?
Yeah, so my fund launch email is easy. It's scott@fundlaunch.com. If somebody's, when I started my journey with Fund Launch, it was 4 years ago. I call myself fun curious at that point. I wasn't completely committed because I didn't completely understand it. We've also just launched a single asset fund product, which is syndication, that's really robust. So it's a good starting point, I think, for somebody that's ready to take that leap. Beyond that, I'll answer any email when somebody sends me a question. My personal email is warrior4 small business spelled out @gmail.com. And people should reach out all the time. A few years ago, my wife said to me, "When are you going to start getting paid for all the teaching you do?" And I was like, I don't know, because I'm just serving. I'm just out there. I want to see people do well. If I can, help somebody from not having a Thelma and Louise event in their business life, then I'm going to do everything I can to do that. So.
Well, Scott, that is very generous. And that's what, I think that's how really, it really works is if you give, people know when there's value to get and attain from you. So I'm sure that's going to be made up in spades. Thank you, Scott, for being part of the Real Estate Pros podcast. Guys, all the information to reach out to Scott will be in the show notes below. So if you have a need and he can fill that need, please reach out to him, just like you said, and do all the things they tell us to do. Like, subscribe, comment below. Scott, again, any final thoughts, sir?
No, I think the only mistake that anybody can really make is to not do. I think
That's right.
do is really never a mistake, because even deals that have gone sideways with me for one reason or another are still a great education, and they're better. I'm not applying anything I learned in grad school to my daily life. I'm applying the life lessons that I accumulated along the way, and I have the bruises and the scars to prove it.
Yeah, those bruises and scars, they have tons of value if you look at it that way. Scott, you just dropped some knowledge on us. Thank you for that, folks. Again, thanks for watching. We'll see you next time on the Real Estate Pros Podcast. Goodbye, everybody.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.